Dear students, welcome you all to session 24, chapter Mutual Funds, Financial Management, 6th semester BCom of Mangalore University. In this session, let us understand the classification of mutual funds. Mutual funds can be classified on the basis of function as open-ended scheme, closed-ended scheme, interval schemes. On the basis of portfolio objective, mutual funds can be classified as income funds, growth funds and balanced funds. And on the basis of investment pattern, mutual funds can be classified as equity funds and debt funds. Now, the first classification, that is the classification of mutual funds on the basis of functions. We can classify it as open-ended schemes, closed-ended schemes and interval schemes. Now, open-ended schemes are those schemes where the investors can redeem and buy new units throughout the year as per their convenience at net asset value related prices. So, as per the SEBI regulation of 1996, open-ended scheme means the scheme of a mutual fund which offers the units for sale without specifying any duration for redemption. That is, the period of redemption is not mentioned in case of open-ended scheme. The investor can buy as well as sell the mutual fund schemes at any time. So the units of the mutual funds can be repurchased or sold on a continuous basis. That means an investor can become a member of a mutual funds by buying it, that is by purchasing it, or he can exit from the mutual funds by selling the units back to the mutual funds. So these sale as well as repurchase of the units, this take place at a price called the net asset value, and these are announced by the net asset value is announced by the mutual fund on a periodic basis. So there is no fixed redemption period in open-ended mutual fund schemes. We have the next category, that is the closed-ended scheme. A closed-ended scheme is one in which the period of redemption of the units is specified. That is, the number of years of this mutual fund scheme is specified, and these have got a fixed maturity. After the initial offer of the units, the mutual funds do not buy or sell the units, but these can be traded in the secondary market, that is stock exchange. So when it is traded in the stock exchange, the market price of the units under the scheme is decided by the market forces of demand and supply. The liquidity to the investor is provided by the stock market. So in this case of closed-ended scheme, the period of redemption of the units is specified. Then we have the next scheme, that is the interval scheme, which is actually a combination of open-ended scheme as well as the closed-ended scheme. So interval schemes combine the features of open-ended scheme and the closed-ended scheme. They are open for both purchase and redemption during pre-specified intervals, namely monthly, quarterly, annually, etc., at the prevailing net asset value based prices. So these are the different types of mutual fund schemes based on the function. They are open-ended scheme, then the closed-ended scheme and the interval schemes. Thank you.